Money Radio for a really great future. We're talking real money.
Let's say you've got a terrible disease. What's the worst you can get? Cancer. Let's say you've got cancer. And your cancer has spread to multiple organs. And you are scared to death about what might happen, but you really aren't sure. You've never had a surgeon operate on your cancer before because you've never had it. So you go to a surgeon and you have a consultation with the surgeon, and you like the surgeon, you think the surgeon's pretty good, and you tell the surgeon, tell you what, I'm going to let you go ahead and do the surgery. I want you to just do the surgery on the gallbladder cancer and skip the liver and the spleen cancer until I see how you do. I just kind of want to try you out before we dive in. And the surgeon's response is going to be, are you out of your mind? I have got to do the whole thing. I have to come. We're going to cut you open multiple times. You're going to test me to see if I get it right. You never know what might happen. I am a professional, and I am here to manage your health and make you better. You dumb bunny, you.
That's absolutely spot on. And yet so many people call us and ask for exactly that. This came up recently in a conversation with somebody I've known for a long time, where they said, look at my portfolio, which I did, and it was hodgepodge-itis on steroids. A lot of things here or there. It had, bonds in Roths. I mean, every mistake you could make was there. It was, and this is a person who's been a saver, but not an investor. Just really didn't know much about it, admits that this is not where they are. But the whole point of the conversation was, well, let me give you some of it and try this out.
Okay, here's an even better analogy. You go to a symphony concert, okay? You go to the concert, you're sitting in the fourth row, the concert's about to start, and you stand up and you go, can I just hear the first violin before you start to see if I'm going to like this?
You cello, you stay down because I'm going to go with the violin.
Okay, I get it. What you're trying to do when you say that is you think investing is now a game.
No, beyond that, this is what the industry has sold you for almost 100 years now.
Because the industry has gamified investing.
Exactly. And has said, we've got this great stock, we have this new product, we have this thing, which they introduce.
Which is going to make you more money than that other thing.
Exactly. This is something you really need to take advantage of. You've heard about it, maybe. Let me tell you why. And that is a transactional business, which Wall Street really kind of was up till maybe 30, 40 years ago. I mean, till the RIAs really got going, right? It was very much of that.
Well, all you have to do is go back and, it's not real life, but it's pretty close, is watch movies like Wolf of Wall Street, where you'll see the boiler rooms where the whole thing was just get somebody on the phone and sell them this new hot thing. You just give me a little money and let's see how it does. And then, remember, this was the pitch. And then if it does really well, you're going to give me more of your money, right? And then I'll show you. A good investment advice provider, a good financial planner is not going to get into the game of, I'm going to beat so-and-so. That is not what a good advisor should do for you. It's not about beating the market or beating that firm or beating your neighbor. It's about making your future better with a plan.
Yeah, and it's not as exciting, by the way. And
no, it's boring.
If someone is doing that, selling you investments and ideas, pushing returns or futures of a product, then you can be pretty sure they're not 100% fiduciary. You can be pretty sure that they are working for a broker-dealer. As I said, they're in a transactional business. And they don't make, you just mentioned this you sort of buried the lead here. They don't make planning, tax planning central. It's not the starting point. It should be the starting point for any financial relationship. Really should be. And again, it's not as fun.
Well, although there are some fiduciary advisory firms who make that part of their pitch, that they're going to give you a more sophisticated way to do it. I just recently, I don't know how you can miss them, the Fisher commercials are everywhere.
Nope, I don't watch TV commercials very often. So.
Well, they show up in football games, which is where the only place I see.
There, but
yeah,
but I watch NFL Red Zone, so I don't see any.
Oh, you don't get any commercials there.
Yeah.
So their pitch is, we're a fiduciary all the time. Got that? So are we. Good. That's good. And they do mention at the end, we do tax planning and that kind of stuff. But in the middle there, they say this is for investors who've outgrown mutual funds. We create a custom portfolio for you. The implication being you're going to make more money with our custom portfolio than you will with just dull, boring mutual funds.
Yeah, and again, they don't. They spend a little time on planning there, but again, it is about the investments, right? From Ken Fisher. Ken's been smart about the market. He knows which companies to make bets on. And by the way, the only track record we have of Ken's is from his mutual fund, and it didn't do very well.
He stopped years ago. Ken Fisher came out with a mutual fund, and I think he forgot that the reason he did so well in his column with Forbes was because he had the first mover advantage, and he also had the self-fulfilling prophecy advantage. If he would mention a stock in his column, thousands of people would buy it.
Yep.
And so it looked better. But if you're doing it in a mutual fund, you're actually going up against the market. You're trying to buy into the market, and you're moving the market with your purchases.
And by the way, if you believe in Ken, you have to believe in active management. You really do, because they're telling you that they know enough about the future to pick the stocks, the locations, all those kind of things, and that they have for a period of time. And they are, by the way, still, I'd say the biggest marketer in the registered investment advisory space.
They're online, they're on TV. Miles. They spend a fortune.
Yeah, they've always been great marketers, and they're good closers, because people have called me and told me about the times when I got closed by somebody at Ken Fisher. They're very persistent. They stay on it. They sell the benefits, et cetera. But, okay, so going back to this conversation. So I told this person, well, I'd love to work with you. And by the way, I don't pitch my friends, because I work for some of them.
Friends and business should be separate.
Yeah, but I do have some that I take care of because they get it, and we figured it all out, and it hasn't had anything to do with our relationship on the friendship level. Of course, we haven't lost all their money either. I hope I can say that. So anyway, the thing of it is, I had to tell them, I'd love to help you, but I don't do anything where I just say, sure, we'll put you in this fund because, we could do that really well after last year. By the way, we just take international small cap value and put you all in there because it made 40%, and that was really hot and really sexy, and you got to take advantage of that just in time for it to go down. That is not an advisor. That is a salesperson, and you do not want a salesperson. You want a full-time fiduciary that is planning, taxes, portfolio design, uses exchange-traded funds, and not focused on returns or making this sexy. That's the other part of the problem I see for most people is they want to make a move because it feels exciting in some way. This is going to be new and it's going to be cool.
And one of our big problems as human beings is we like to win at things. We're very competitive, and we like to win. And as investors, I think there is a prevailing attitude that it is a contest, that I am investing to see how much I can make. I'm not investing toward a goal. I'm investing to make sure that I have, $1 million's not enough. I need 3 million, or I need 10 million. It's a game. You're playing. And you're doing yourself and your future and your family and everybody connected to you long term a huge disservice by doing that. And yourself, my gosh, the amount of agony you have to go through when you lose sometimes. Don't look at it as winning or losing. It's just about playing the game effectively.
Yeah, and I think I have this right. Is Larry Ellison now the richest person in the world because of the Oracle stock? It's something like that. I think he moved ahead of the other super wealthy. I believe he did not long ago. But the thing I try to remind people is you're never going to have more money than Larry. Well, unless you day trade every moment of every day for the next 50 years and you're really good at it. So it's not going to happen. But what you really want to do is kind of figure out what rate of return you need for the future and whether or not your heart, mind, soul can take the ups and downs of volatility of the market to achieve that. Once you've done that, then all the rest of this, the new sexy products don't matter. They are not important. You can let all of them go because you don't need to try to be better than Larry. You're looking it up. I think I was right when I read that recently.
Yeah, I'm actually reading too. It depends. It depends who's richest.
Okay.
But currently, the numbers as of late 2025, I don't have the 2026ers. Elon Musk was just under $500 billion. Larry Ellison is at about just under $300 billion, it says.
Okay. Okay.
But Larry Ellison still has enough money in the bidding war with Netflix over Warner Brothers, he still has enough to help his son win.
Oh, is that what's going on
If he wanted
there?
to throw the money in. If he wanted to throw his personal money in. But remember, he probably won't do that because all of these guys feel like they're going to – these are the poster children for winning the investing game. I feel like you'd think that with that kind of money, you could just do a bunch of nice things for people. But no, you don't want to give that money up. You even borrow money. They're borrowing money to buy things.
Yeah. The bond market didn't like it.
When they've got more money than half the planet.
But let's use somebody else's money for that deal.
Individually.
Yeah, crazy. So, again, if somebody is pushing something like that on you, or if you meet with somebody who says, look, we're going to make you more money, there's a great return on this, there's something very exciting about this, that's product, and what you really want is planning, not product.
Oh, that's good. Product versus planning.
Yeah. There you go.
You want planning, no product.
We keep getting your questions to talkingrealmoney.com, and we love it. You can type them. I like those because, I like printing things out. It's kind of fun. It's kind of exciting. It's kind of sexy.
Kind of like Tom. He's trying to win the game by printing some things in his basement.
Exactly. Well, there's that.
On that full-color printing press.
And if you speak them, you end up on Don's always amazing Friday podcast. You can do it that way.
The Friday Q&A podcast.
There you go. So, but this was typed in on the interweb from Herndon, Virginia. It's Robert. He writes us, in my 401k, I have $1 million spread across, these are his words, too many funds on the equity side of my portfolio. How can I fix this? Currently have 16% in VBIAX. I know this overlaps with VT Sachs and BND. Yeah, because VT Sachs is the global, that's the global, right? The total stock.
VT Sachs is U.S.
U.S. total stock.
I know,
BND
it's so
total
confusing.
Bond. He also has 7% in VFIAX, 23% in VT Sachs, 26% in VIGAX, 4% in VIMAX. So here's what you've done, Robert. He has the S&P 500. He has U.S. growth, because that's what VIGAX is. And he's got U.S. mid-cap and small. But the thing is, then you own a one fund that has all that in it anyway. So you got to decide either you're going to do all these funds diversified.
Are you saying VBIAX sort of just covers everything?
I didn't look up VBIAX.
Well, that's the Vanguard Balanced Index.
Oh, okay. So that's a stock bond, but that's going to be mainly large U.S.
Yeah, you're right. Yeah. It is.
But so it's not going to have all. I'd rather see if you're going to do it that way than just have VT Sachs and BND. But what you're doing here.
No, but you got no international.
No international. But what you're doing here is you're conflating. You're conflating the idea that you have an index total stock fund, and then you hold all these other stock funds. So you're overlapping. You have to decide if you want to do all those funds, spend the time on that, or if you'd rather just do one stock fund and one.
Where does he own all these?
Did
he say which account?
401k.
Okay, so it's all in his 401, which means he can unload the whole kit and caboodle. Yep. I would like to, you could go with just a globally diversified target date fund, or you could do something as simple as maybe an AVGE and a BND.
He might not have AVGE available in his 401k.
Or VT and VBR.
Yep.
Or their mutual fund equivalents.
But we do run into this from time to time where people say, I built this whole portfolio of all these index funds, and now I'm going to put money into a total stock fund. Well, that's just overlap. Why would you own both of them? One or the other.
Yeah, you don't need all the bits and pieces and parts. How old was he?
He didn't give us an age.
All right. Let's use what's a target retirement 2040, let's say. What does that look like? Probably, no, I'm not going to guess. I'm just going to look. It's a 75-25. Okay, that's still pretty aggressive.
That's 2040? Oh, 2040. Yeah, so that's still 15 years basically from retirement.
That's 15 years off. So if you're that far out, what you get is because you have Vanguard there. So if you have this one available, you get the total stock market index U.S., you get the total international index, you get the total bond market U.S., you get the total international bond index. You covered all the bases. We haven't got a small value tilt, but that's okay.
Yep.
You've really covered the whole doggone market with one simple fund, and it makes your annual rebalancing really easy because you don't even do it.
You don't have to do it. They do all that for you. I like that. That's a great idea. But again, then you wouldn't add in all these other funds.
No, they'd all go away.
You got all those assets in there already, all those stocks, so you don't need to do it twice.
VFORX is the 2040 version for those who are playing along.
And then you're all set.
Oof, FORX. Oh, 2040.
Get it? Yeah.
V4X.
Yeah, before X. Makes
Very clever naming convention.
From Gilroy, California, Sal writes us, "Hi, Don and Tom. Big fan of the show. Read an article that Michael and Susan Dell pledged $6.5 billion to encourage families to claim Trump accounts. What are Trump accounts? Is this a good investment for families with kids under 10 years of age to qualify for the donation? I'm not a fan of the president, but if these accounts can help my kids financially in the future, I'm considering opening these accounts for my kids. In case you're interested, I already have 529s that we invest in every month. So the Trump accounts would be in addition. The Trump account is just a savings account. There's nothing special about it. It gets no special tax treatment of any kind. I always forget the rules now.
You get free money. You get free money, though.
But it's not every kid, right? Isn't there a cap to the income, et cetera?
Well, no, that's on the Dell thing.
Oh, okay.
I'm not sure what the requirement is. Here's what it reminds me of. You remember the 19th century and the machine politicians of the 19th century?
Tammany Hall?
Yeah, well, or some of those. One of the things a lot of politicians did to get people to come out and vote for them was they gave them money. Just actually money. They would hand them money. $10 bill. Money. Here, come vote. $10 bill. It sounds a lot like that.
We're just buying your vote.
We're just buying people.
They claim, by the way, what they're trying to do is increase the birth rate in America, which has gone consistently down over the last 30-plus years. So more people. But my guess is if you're going to get $1,000 to raise a child that's going to cost you $200,000, that's whatever. That's an estimate.
But again, it's
not
free,
a good return on your investment.
No. But it's
for
free
the money.
And the IRS hasn't really. I haven't seen any IRS guidance on this.
No,
you can open the account for any kid who has a valid Social Security number. It will not become available. You can't even sign up for it until next summer, mid-2026 sometime. The initial contributions, the $1,000 comes directly from the federal government. That's in addition to Dell's deal. Now, Dell's deal, he has certain zip codes.
I did read that part, yes.
Where you'll get the money.
Yeah.
But with Trump's, you get $1,000, and it is, I think it's every kid.
So there's no income limit there at all?
Not there. I think it's only the Dell contribution.
Okay, so every kid's going to get $1,000 if you were born in like a 3-year period, if I remember right.
Right, and the Dell contribution, I believe, is, what is it, $250?
And if you're trying to make the deadline, you still have a chance to create a child here, right, in the next few months or something?
Yeah, I guess so. Okay. Yeah, it's $250 per kid from Michael Dell. So here's the deal. If you live in the right zip code and you have a little person in your life, yes, you can get them some free money.
But there's no tax help. I mean, a 529 gross deferred, and then when you take it out, there's no taxes if it's used for educational expenses. So that has a far, to me, greater advantage if the money's going to be used for educational purposes. Way better.
Well, I think it grows. Does it grow tax deferred?
The 529?
No, the Trump account.
I don't believe so. I think we looked at this originally when it came up, and it's just a regular old savings account. So if there's some taxation involved, that's either going to fall on the child. I mean that in a figurative sense, by the way, or the parents. Somebody's going to pay the tax on the interest there.
The accounts cannot be withdrawn before January 1st of the calendar year in which they turn 18. And I do think they grow tax deferred.
Oh, okay. Then I had that part wrong. Okay.
Until 18. And then when let's see. They are eligible. Oh, okay. So you can do, you do post-tax contributions of $5,000 a year. They grow tax-free until the money starts tax deferred. Okay. And then the eligible withdrawals will be taxed at the beneficiary's income tax rate.
Okay. So there's a little bit of a benefit there. And by the way, if Dell offers you a computer instead of the money, take the money. I'm just going to put that out there. So
the computer's probably worth more.
I don't know.
Right now.
Not from Dell.
I would not. You couldn't give. Literally, I would not take a free computer that runs on anything but Mac OS. I wouldn't.
Really, that is a shocking statement from you.
I've only been using Mac OS since 1985.
All right, I hope I have this right. From Linthicum, Maryland.
Don't even try. You could just say the person's name and they're in Maryland.
Arthur. He said, Arthur writes, and he'll probably write me again after I assassinated his hometown name. Our local Board of Education has a supplemental retirement plan managed by Corbridge Financial. The company looks on the surface reputable, but are they not just another annuity company charging high fees to get our teachers money? Corbridge Financial. I feel like we've talked about them
Corbridge
before.
We've talked about. Corbridge can be good. Corbridge can be bad.
That was my take.
Corbridge has options of all kinds. If you stick with their no-load, low-fee index options, you are great. If you go with their annuities, bad. So Corbridge has good stuff. Corbridge has bad stuff. Corbridge is often, when we look at 403B Wise, which is a resource for 403B plans.
Which is a good place to go. Yep.
Yeah, when you go look them up at 403B Wise, you find that so many school districts have horrible choices across the board, and they only get a decent mark because they have Corbridge, because Corbridge at least will offer you low-cost index products.
But you have to make sure that you use them, right?
Yep.
Properly, because as you said,
they are not going to help you use those.
Nope, they won't, because they much prefer you move into the aforementioned annuities. Yeah, great question. I apologize to all those people that live in that part of Maryland as well.
Well, basically Maryland is kind of that part of Maryland.
I'm just going to apologize to everybody in Maryland.
It's not as small as Rhode Island. I mean, literally, you could, when you say, you could skip Providence or Newport, you just say Rhode Island. It's the size of New York City. It's like one place.
I'm not gonna talk bad about any place because I appreciate you listening anywhere. So thank you for that.
As do I. Did you have another question?
I'll say something bad about Portland because I always do. Portland, Oregon. That is.
Yeah, because it's a soccer thing. Yeah, with Tom, it's always a soccer thing.
If you hadn't figured that out by now, it is.
Do you have your tickets for all those exciting World Cup games this summer?
We haven't really touched on this on the podcast.
No, we're apparently the U.S. got in the good thing. They have
a good group because the teams they're matched up with are not among the best. That's good news.
They're playing the also ran to Uruguay, which is Paraguay. It's only part of Uruguay.
The bad news is, and I can't figure this out. I've been to World Cups all over the world. Because
yes, you have. Yeah.
And I've spent, decent coin going and doing that. I love it.
It's part of the Tom Cock vacation series.
Exactly. But here's the thing. Right now, the pricing for game, you go to StubHub and look up, the games in Seattle, for example. Upper Deck are still like $5,000. And I went through the lottery thing. I went through all that other stuff, et cetera. I mean, the prices, I have this weird feeling because I know FIFA and I don't like them. They're just money grabbers. I get the sense that they're somehow managing to keep those prices up because, I mean, no offense, who are all these people who are going to buy, spend $10,000 for 2 seats to go watch the game?
Oh my God.
I mean,
Okay.
Don's looking at the price right now going,
I
they
am.
lost their
I am.
mind?
This is the first game, the U.S. versus Paraguay on June 12th at
That's
SoFi
down
in Inglewood,
SoFi, right?
California.
Yeah. How much are they there?
Well, good luck getting any midfield seat. There are semi-midfield, just right or left of midfield. Amazing view, only $15,156 a ticket.
And
A
Seattle,
ticket!
I know. Seattle upper deck is like 5,000. So you
Well,
asked me.
upper deck, 5,907.
I'll be watching it with you, I guess, on a TV somewhere. So I'm not
The
going to spend that kind of
cheapest
money.
seat on the secondary market to sit in SoFi Stadium is in level 5 at the end zone. $3,300, two seats.
Oh,
That's it.
Then $6,600 to go catch a game. If you bring somebody with you, that's
Nosebleed,
problem. Yeah,
the far end of the field where you're going to be lucky if you see a goal, if there is one, because it's soccer.
there may or may not be.
So you'll see little tiny pixels running around on a green background. You might as well just play like an old Nintendo video game of soccer.
I hadn't thought of that. So anyway, the short answer is it appears at this moment
Going to the World Cup.
I won't. And we even looked up like going to, Mexico, places there. Even there, the tickets are outrageously expensive. I don't know what's going on. As I said, I don't trust FIFA. I don't trust StubHub either, by the way, because I've seen too many weird discrepancies there. So we'll see.
If you want a seat in the trophy lounge.
Oh yeah, how much?
Only $20,000 a person.
I'm sorry to say I'll have to go by myself for that one.
Free drinks.
I love that. I have to drink a lot for $20,000.
Yeah, $20,000 worth of free drinks. You will be literally
Really
taken from the stadium on a stretcher. Except it'll be the coroner's stretcher.
Exactly. So thank you for asking. But as of right now, I will be home glued to my set there. So that's the way it goes.
Dang. This is astonishing.
Yes. It
Oh, my
truly
God. There's a seat in row 1. I just found this.
Oh, sign me up.
$41,000.
Oh, I guess that's no.
2 tickets together, so $41,000 each.
So that's a mere 82 plus fees?
Plus fee. No, that includes fees, it says. No, they're going to throw the fees in at that price. We'll cover the
100K.
fees.
No problem. You're good. Yeah. Thanks.
All right.
You're a big help.
Thank you all for being a part of our program. And boy, if you want to see the World Cup, you're going to be talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.